Good morning, viewers. My name is Misa Mutana and welcome to our fourth program for Accounting Grade 8. The topic for today is the income statement. Before we get started, let us look at the lesson objectives, which are: describe the following concepts, which are accounting or financial period, cost of sales, gross profit, gross income, net profit or net loss, financial statements, and income statement. 2. Calculate cost of sales, gross profit, gross income, net profit or net loss. And 3. Select the correct nominal accounts and draw up an income statement for a trading business. Now that we know the lesson objectives, let's get started. We start with accounting or financial period, which refers to a fixed period for which the final accounts are drawn up to calculate profit or loss. This period should always be the same length of time for comparisons purposes. We move on to cost of sales, which is the cost of goods sold. Cost of sales is basically the opening stock plus purchases less closing stock, which gives us cost of sales. Gross profit, the difference between sales and cost of sales. Gross income, gross profit plus other income for a financial period. We move on to net profit, which is gross income less expenses, which is basically when the income exceeds the operating expenses of a business. While net loss is gross income less expenses, which is basically when the expenses of a business exceeds its income. Financial statement is income statement and balance sheet that gives an overview of the results of a financial period and financial position at the end of the financial period, respectively. While income statement, a statement which shows the financial results for a specific financial period. Let us look at the formula used to calculate the following. We start with cost of sales. For cost of sales, we take opening stock, add purchases, add carriage inwards, less closing stock, which is also referred to as final stock. Let us use the following information to calculate cost of sales. Opening stock, 67,000 Namibian dollars. Closing stock, 74,000 Namibian dollars. Purchases, 35,000 Namibian dollars. Carriage inwards, 1,830 Namibian dollars. To calculate cost of sales, we are going to take the opening stock of 67,000 Namibian dollars, add purchases of 35,000 Namibian dollars, add carriage inwards of 1,830 Namibian dollars, less the closing stock of 74,000 Namibian dollars. Therefore, the cost of sales is 29,830 Namibian dollars. To calculate gross profit, we'll take sales less cost of sales. Example, let us use the following information to calculate gross profit. Sales, 64,200 Namibian dollars. Cost of sales, 29,830 Namibian dollars. To calculate gross profit, we are then going to take the sales of 64,200 Namibian dollars, less the cost of sales of 29,830 Namibian dollars. Therefore, the gross profit will be 34,370 Namibian dollars. For gross income, to calculate gross income, we will take gross profit, add other incomes. Example, let us use the following information to calculate gross income. Gross profit 34,370 Namibian dollars. Rent income 8,000 Namibian dollars. Commission received 2,000 Namibian dollars. Therefore, to calculate gross income, we are going to take the gross profit of 34,370 Namibian dollars, add rent income of 8,000 Namibian dollars, add commission received of 2,000 Namibian dollars. Therefore, the gross income is going to be 44,370 Namibian dollars. For net profit, to calculate net profit, we will take gross income less expenses. Example, let us use the following information to calculate net profit. Gross income 44,370 Namibian dollars, salaries 5,000 Namibian dollars, telephone 2,000 Namibian dollars, and rent expense 8,000 Namibian dollars. To calculate net profit, we are going to take gross income of 44,730 Namibian dollars, less salaries of 5,000 Namibian dollars, less telephone of 2,000 Namibian dollars, less rent expense 8,000 Namibian dollars. Therefore, the net profit will be 29,370 Namibian dollars. Let us look at the scenario where the business have made a net loss. Example, let us use the following information to calculate net loss. Gross income 44,370 Namibian dollars, salaries 30,000 Namibian dollars, telephone 5,000 Namibian dollars, and rent expense 9,500 Namibian dollars. To calculate net loss, we are going to take gross income of 44,370 Namibian dollars, less salaries of 30,000 Namibian dollars, less telephone of 5,000 Namibian dollars, less rent expense of 9,500 Namibian dollars. Therefore, the net loss is 130 Namibian dollars. The answer for net loss should always be shown in brackets. An income statement is one of the financial statements that is used to show the financial results of the business for a specific financial period. We draw up an income statement to determine whether the business have made a net profit or a net loss. Let us look at the format of the income statement. The income statement consists of 2 columns, and you always start with the heading of the income statement. Example of income statement heading is as follows. Income statement of Apple Traders for the year ended 31st December 2020. We then draw the 2 columns of the income statement. We start by writing sales and place the amount in the second column, followed by less cost of sales, which we take opening stock, put the amount in the first column, add purchases, we put the amount in the first column, add carriage inwards, we put the amount in the first column. These 3 amounts are added up and we subtract closing stock. The amount we get is then the cost of sales amount, which is entered in the same line of less cost of sales in the second column. We then subtract cost of sales from sales, which gives us gross profit, and the amount is written in the second column in the same line of gross profit. We move on by writing 8 other incomes. We list all the incomes and record the amount in the first column. These incomes are then added up all together, and the total of the incomes is recorded in the second column in line of add other incomes. The total of incomes is added to gross profit, which then gives us gross income. And then the amount is recorded in the second column in line of gross income. From there, we list all the expenses and record the amounts in the first column. These expenses are then added up together. Then the total of expenses is recorded in line of less expenses in the second column. We then subtract expenses from the gross income that gives us net profit. And this amount is recorded in the second column in line of net profit. But if it's a net loss, the amount should be put in brackets. Let us recap on what we have learned today. We have looked at the definitions of the following concepts, which are accounting or financial period, cost of sales, gross profit, gross income, net profit or net loss, financial statement, and income statement. We also look at the formulas to calculate the following, which is cost of sales, gross profit, gross income, and net profit or net loss. And finally, we also looked at how we draw up an income statement. Before I say goodbye, I would like to ask the following questions based on what we have learned today. A. Define the following concepts, which are accounting period, income statement, and cost of sales. B. State the formula to calculate gross profit. And C. Why do we draw up an income statement? Thank you for watching, and goodbye.